Hello everybody, in this video I am going to be discussing support and resistance. So as a new trader, you've probably heard several people mention these terms. What exactly do they mean? So to demonstrate on this chart, this is a blank chart. I have loaded on here the gold February 2024 contract on a 5-minute time frame, and I want to show you what support is first. Support is essentially the floor. It's the low price where we can expect the market to go to. Well, how do we expect the market to go to that? Well, what we do is we look left. So for example, here on the chart, if we look all the way to the right and go left, we can see that the market has formed a range. So what we do is we look left and we locate several areas where we see the market price touch repeated times. For example, I'm going to use a horizontal line tool that I have located in my NinjaTrader platform. And what I'm going to do is just put it on the extreme lowest point on the chart. And I'm going to color this purple for demonstration purposes. So once this is plotted to the chart, I see an extreme low. How do I use that? Well, for me, that's not really something I can use. The purpose for this line, I want to find multiple areas on the chart where the market price touches. So I will click this and drag it up to a location where I see quite a bit of touches. Now right here, there's quite a few. Based on this chart, there's quite a few touches around this price point. However, if I drag it up and go up a little bit more, okay, got some more recent ones here. What about going up a little bit more? Okay, right there, I've got a little bit more. And as we see, this is a major level where the market price likes to fluctuate down towards. This is what we call our floor. This is support. This is a price location where the market price likes to stick to on the bottom side. What is resistance? Well, similar concept, but for the top. So what I'm going to do is left click that horizontal line tool and go back to that extreme top and then drag down to a location where I see quite a bit of touch points. Right there, there's a few. We got right here, right here, right here. We can also drag down. We got a few more here, but right there, we've got a tremendous amount of touch points right through here, 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 all through the middle of the chart, and then as recently as this region right here. When we put this on the chart, I ask myself a simple question. What is the purpose of why I'm drawing these lines? Well, the purpose for me is to find areas of concentration where the market likes to stick to. So can this be adjusted to down here? Yes, you can. You can have sub layers of support and resistance in between your main layers. But what I like to do is find those areas of concentration to help give me ideas of potential U-turn points where the market will reach a particular level and then reverse to go back to another level. If it's up to the top, it hits that resistance level and then bounces down to a support, and then vice versa. Once again, it's not an exact science. When dealing with support and resistance, there are multiple different techniques of how to determine support and resistance. And how I like to use support and resistance is to help me isolate where those potential sticky zones, where the market likes to stick to on a chart, will be located. So now that we have that determined, how as a trader do we use support and resistance? Well, here's the thing. If you're looking at this chart, there's two things you can do. You could look to either trade the range or look for what is called a breakout. So inside of this range, if you've determined based on the research that this market is in a sideways motion, what you can do is if you choose, you can use this support and resistance to locate trading opportunities within the range, or if you're looking for a breakout condition. So how can you do that? Well, if I'm looking to go long on a trade, if I'm looking to buy into this market, what I can use is this support and resistance zone to make a determination. Do I want to buy from this low price right here all the way up to that resistance? That's one way of using support and resistance. Looking for a buy opportunity to go from one price area where the market's been multiple times before to go to the next level where the market has been before. Another way of doing it is if the market closes below this support level, and if you do your research and you make the determination that you would like to sell the market, you would like to go short on the market, well, you could use that same area, and when the market closes below this support level, if you choose to short the market, you can look for selling opportunities to locations where the market has been before. Somewhere like on this chart right here at the extreme low that happened here around 10 o'clock the day prior. So if I'm looking to sell, I can look to sell once we close below the line and then place our target here where the market has been before, and then our stop loss wherever we determine our risk maximum would be located at. So based on this example, if we were to do a sell position, well, you could do so. You can sell it because it closed right here. Let me zoom in on the charts. If you were to get into a sell position, you'd also look at where the market has been and where we're expecting it to go based on these levels. If you're looking to sell, it could potentially come back up here. So for me, I'd want to place my stop loss somewhere out of the range where the market price may not touch, somewhere like up here. Why up here? Because it's out of the range. Where would my take profit go? Somewhere down here where the market has been before that touch level here. So if I were to sell the market, this would be my risk potential, and this would be where I'd like to place my take profit. Let's see what would happen. It might go up and cross back into the buy zone. We'll see. And in this example, if we were to sell the market, it would have gone up, gone down, gone up, gone down. And as you see, it's sticking right to those price levels. Let's keep going, keep going, keep going. And it looks like right here we got stopped out. If you were selling the market, that would have been a losing trade. However, if you were using the support and resistance, and with your analysis said, well, we broke a counter trend line, for example, using some other analysis techniques like a counter trend line break. And if you said, you know what, I'm going to wait for the market price to close above the support level, get back into the appropriate zone, and as well break a counter trend line like this. And I typically color my counter trend lines orange, just for visual purposes. Now, if I extend it out and say, well, when the market price gets back above this level and breaks that counter trend, I will place a buy order. Well, right there, it would have broke the counter trend. And right here, it would have closed above the support level. So if an individual wished to take a buy trade to go from this level up to where the market has been before, this could have been a potential buying opportunity to a higher price. Let's see what would have happened. Market just kind of fluctuated. And as you see, it's still going. And where are we at? Well, still on its way. Oh, there we go. Hit our take profit. This is how an individual can use support and resistance to help look for trades. One could look for opportunities within inside of the range, locate where the market is stuck to, where those potential points where the market likes to return to, using that historical data and using a horizontal line. That's one way. Or another way is to look for those breakouts when the market closes either below that support, or if we're looking for a bullish breakout, closing above the resistance level and breaking that consolidation. Once again, this is a general overview of what support and resistance is, as well as how to use this information to help look for trades.